Welcome back to Talk Property to Me. I'm Aaron Downey, and today we've got a special guest, Sam Taylor. Welcome.
Thanks for having me, Aaron. It's a pleasure to be here.
Pleasure to have you. To get started, Sam, I want a little bit of a background for yourself and a little bit about the real estate journey and what inspired you to become an agent.
Yeah, look, it's probably not the most exciting story, but I was actually a primary school teacher before I was a real estate agent. So I used to work locally, not too far from where we are right here now. So I used to work locally, was a primary school teacher in the Newcastle and mid-North Coast areas for about 5 to 6 years,
Okay.
give or take. And my flatmate, I owe him a lot of credit. He was actually a real estate agent, used to talk to me a lot about real estate. And after my wife and I purchased our first home, I just never got off realestate.com.
Yeah.
Like I was always on it.
Yeah.
And my wife's like, we've bought, like it's all over. I'm like, I really have an interest in this. Was starting to feel a bit repetitive in my last role.
Yeah.
And I was lucky enough that same flatmate and his boss were lucky to take a gamble on me and get me into real estate. So I entered real estate in 2018.
Yeah.
And yeah, the rest is history.
It's been quite successful, I've seen as well during that time.
Yeah, it's been a busy time. You always, obviously there's some really hard times in real estate, whether you're busy or you're trying to start out. And breaking through is the biggest challenge. I often say to some people that are starting out that I'm in a position where in that first 2 to 3 years of real estate, you really have to do things incredibly well to because you've got no track record.
Yeah.
Right? So when people are making the decision, they're purely making it on the fact that you're very, very good, even though that you have no traction whatsoever. Whereas as you get further on, I wouldn't say it gets easier. You've got other challenges like managing, but with track record becomes social proof. And with that social proof becomes an easier decision for a potential client or a potential vendor. So it has been a successful ride. I'm not alone. I've got a great team around me that cover all my flaws and do a really good job. And they've been with me for a long time.
Yeah. It sounds like, you had a long-term mindset from the beginning. And
I had a goal, and I've always been known to set goals that are super achievable, and it's not because I just want to make sure I have that accomplishment. And I had it was never financial, but I had a goal that if I could be in a position where I was more content than what I was at my end of my teaching career and realistically remunerated at a similar rate after 3 years of real estate, then I'd be happy.
Yeah.
Because I left essentially $100,000 teaching job for a massive gamble in real estate. It was quite a significant pay cut. I was lucky that my wife was on board with that before we had kids.
Yeah.
I don't know if I'd be able to do it again now with children, but it was a good time to do it. And I worked incredibly hard and I just treated it like I was still teaching at Newcastle Grammar, was where I was teaching, which you used to have really good communication with your clients. Yeah. And I've sort of carried that through and it's held me in good stead.
I was going to say, do you think that background of being a primary school teacher, but also now setting those goals, do you think that's what sets you apart in the marketplace as an agent?
I think everybody's got their own point of difference. There's some really incredible real estate agents in our Newcastle Lake Macquarie market that have come from such diverse backgrounds. The thing is with teaching, and I always look at it, real estate agents have one of the worst stereotypes of any industry, right? So my dad reminds me of that on a regular basis.
Yeah.
I'll never forget the day that I rang my dad and told him that I was leaving teaching to be a real estate agent. My dad is a fitter and turner, and he said, "Good on you, mate. What are you going to go do? Something with your hands?" And I went, "Not quite, Dad. I'm going to go and be a real estate agent." And I won't tell you the words that come out of his mouth, but it obviously wasn't a trusted industry in his eyes.
Yeah.
Whereas teaching, on the other end, is if you look at trusted professions, they're often up there in the top 1, 2, 3. So that is one attribute that I think does give us a point of difference, is that, teacher, being an ex-teacher, you have this level of trust. And I think having any form of tertiary education or background, whether it be a trade and coming into real estate, is really important. Your best years, in my opinion, in real estate is like your 30s, 40s, and beyond. But when you're 21, 22, come straight out of school and you're trying to sell someone's $1 million home, I don't know if they necessarily trust that person. You'd have to be incredibly mature, and I definitely wasn't mature at that age.
Yeah, bit too young for real estate.
Yeah.
So, I mean, 2018, in the grand scheme of things, it's not that long. So you've been quite successful, over that last, 6-year period. There's been quite a few sales. I believe there was 130 odd sales that you did in the last 12 months. What has been the most memorable so far? Because there's been quite a few.
Yeah, they've all they've all got their challenges and they've all got their quirks. And I think what I've met is I've made a lot of really good friends out of the clients that I've had, and my core area has massively embraced me, and I'm so lucky for that. I get so many referrals from people in that area. But if I had to go back to the most memorable sale, it's probably the first, right?
Yeah.
It was a block of land. I was in Kemmer Park. It was I sold it for $340,000. Sarah and Shane Place bought that one, and it's very memorable because I door knocked it.
Yeah.
I was 4 weeks into real estate. I've been door knocking nonstop, and I sucked at door knocking. I was good at having a conversation, but I'd come back to the office and how many appraisals did you book? I'm like, oh, I didn't book any. I just chatted to them about life, right?
Yeah.
But it held me in good stead because now they're the people that ring me and they're like, hey, our mates are selling, because I've got a relationship.
Yeah.
It's probably not the most professional thing, but I used to know a really good day prospecting because I'd have to ring my wife to pick me up because I'd had 5 or 6 beers on my way around because guys would be in their shed twinking on their cars or whatever, and I'd be chatting to them about real estate. And they're like, do you want a beer? And I'm like, yeah, I'll have a beer. Not? So I'd have to ring her, I'd be like, Dale, I can't drive. You're going to have to come pick me up. But the first sale, that block of land, it was because I sourced it myself. The people trusted me. And it sold within the first week on the market. And even though it was $340,000, it was a Suburb record for land at the time.
Yeah.
And then I was so fortunate that I was involved in a sale not long after that set the Suburb record for a house. I'm not pretending it had anything to do with me. They were both great products.
Yeah.
But it kind of set me up in that area because people are like, okay, well, this guy's getting better money than everybody else. And I just sort of continued with that, and the rest just continued to grow.
Just sort of had momentum off the back.
I've always had a mindset that agents will spend 1 to 2 hours of a morning prospecting. My belief on that is that yes, you need to do that when you first start, but if you're 5 and 6, 7, 10 years in and you're still doing that amount of prospecting, there's something wrong.
Yeah.
I don't do any form of prospecting, right? I don't do any form of cold calling. I don't door knock. We don't even really do that many letterbox drops. My philosophy has always been around that if you treat your current client exceptionally well and give them outstanding service, the rest will come organically.
Yeah.
Create that circle of influence. And it's held not only myself, but my business partner, Bo Headley. He's very, very similar minded. It's held us in good stead.
I'm starting to get to sort of put all the pieces together now. You've said that you've set goals, and those first 2 to 3 years, you've been asked about how many appraisals that you had, but you're actually just drinking beers with people.
Yeah, exactly. Yeah. So just want to be good at real estate, just go to the pub, right? That's all. No, I'm actually not a big drinker, right? So I was when I was at uni many, many years ago, but those days have changed. So, but I don't know. It wasn't about that. It was just that I got along well with these people. They were really, really good people. And I also got involved heavily with community. So everyone knows BNI groups. I created my own one of those. Doing different things. It wasn't BNI. It was a business network for the local area. But trying to be in a position where I improved my circle of influence. And I get phone calls all the time from brokers and conveyancers, even today, and they'll say, can we sit down with a coffee? We want to talk about working together. And the truth is, my foundations of referrals is pretty set, right? Because I've been working with these people for years and years and years. But I always, they probably think it's quite ruthless, but I always tell these people, I'm like, don't go to the busiest agents in Newcastle. Go to the people that are starting out. Because they'll be the ones that really cherish the phone call. They'll cherish that relationship and grow together. And some of those brokers and the conveyancers, I started out with some of those, they're friends. They were starting out at the same time. And we still work together, and we've all grown our businesses together. I think that's really, really important.
Relationships.
And we're very transparent with each other. If they make a mistake or I make a mistake, we call each other out on it. And we actually have a bit of banter about it. All those sort of things really matter.
Yeah, nice. So at the moment, I mean, like we just said, there's 134 sales, I think, for the last 12 months. You come from another agency that were doing big volume. So you've got a lot of market knowledge in Newcastle, but I'm sure you've got a good amount of property knowledge, broadly speaking. What are you currently seeing in terms of the trends in the marketplace at the moment?
Yeah, I feel like when you talk about broad knowledge, my mum and family and friends in Port Macquarie ring me about real estate up there more than they probably do in Newcastle, which is definitely not my domain. At the moment, across the board, I think I've learned not to judge the market on 1 to 2 weeks. Right? I feel like after COVID, we became very, very conditioned that if homes didn't sell in the first 2 weeks, there was something wrong with them. Now, that doesn't mean you don't want to be proactive during that time. Don't get me wrong. If a property's not selling, we'll always look at a number of different metrics to try and get it there. But you want to be in a position where, like, I'll see agent market reports and they'll have a good weekend. So they're like, oh, the market's hot. The market's doing really well. And then next week their open home numbers are low. So they're like, the market's tanked. Like the market's no good. And you can't judge it on a two week process. Yeah. So I would say that just recently we've seen a bit of a flat spot in the market. Yeah. And I actually think that comes down to stock levels. Yeah. And a bit of uncertainty when it comes to things like finance. Yeah. It's actually crazy how the prices are still so high given where interest rates are. Like it really hasn't affected as much as what we all would have thought. Neither did COVID. I mean, COVID worked opposite. Yeah. I remember when COVID hit, I come home and my wife was cutting things. Like, I'm from a motorsport background. I occasionally race. And my wife's like, you can't do that. Oh, I've cancelled KO. I've done all these extra things that we have in our lives. She'd cancel it because she's like, you're not going to have any work. And the next 6 months was the busiest time that I've ever had. Yeah. So what I'm seeing at the moment in the marketplace is it's been a little bit flat in recent weeks, but it's partially because stock levels are so low. And whilst we love outer area buyers in Newcastle, and we get a lot of them, a lot of our buyers are also local. Yeah. And if a local person is not selling, they're often not buying in the same market. Yeah. So there's less competition out there for homes that are currently on the market. But because there's less people transitioning in general, not just in Newcastle, I'm talking to agents in Sydney, I'm talking to agents in Queensland. We're a member of UrbanX, which is 102 agencies on the east coast of Australia. Yeah. And I'm seeing the numbers because they rank us, like it's a bit of a competition we have between agents. And I'm seeing the numbers for this month and last month significantly lower than across the board. Okay. So all the way through to far north Queensland to Tasmania, I would say they're close to half the GCI or gross commission that we would usually expect. However, the sentiment is that everyone's gearing up for a huge spring.
Yeah, there's a lot of buyers in the marketplace at the moment. So it's interesting that
It's different in different areas, different pockets. So we find like your lifestyle suburbs, not an issue, right? Yeah. But you're in a position where like I'm finding your areas like around a lake, anywhere within a really solid school zoning, like they're still selling well, and really well presented properties with attributes that are hard to come by or a lot of fear of missing out. Yeah. They always do well. Yeah. Exactly. One thing I always find though is we're heading into the period, people talk about spring, the season of selling. I see all the agent videos talking about season of selling. Your lawns are going to look good, your garden's going to look good. Truth is, people don't tend to buy properties based off how green your lawn is. Yeah. What they will buy properties off is their lifestyle and how they're transitioning. Yeah. And what we see in October, November in Newcastle is that we get the highest volume of outer area interest simply from the fact that people are migrating from other areas to secure an address for the next calendar year. Yeah. So you've got areas like the John Hunter Hospital or mining where they're in a position where those jobs will often come out in October, November. They secure the job. They then want to secure the address for the kids, for convenience. So I do like this portion of the year. We do tend to see a lot more out of area buyers.
I think you've highlighted a fair few good points there. One being COVID, and these are all different economic influences. But we've been hit with interest rate rises. We've been hit with a pandemic. And both of those things you would think have a big impact on the real estate market. And broadly speaking, they have. But as we always say, like if you're investing in real estate, it's typically for appreciation and not rental returns. So you're doing it for a long-term, a long-term hold. So based on what you've just said, regardless of all of these things, long-term, you're still going to do well.
Yeah, we spoke about this before. How does a buyer know they're overpaying for a property? Well, there's a number of different things there. Auction's great for this because you get to see your competition. Yeah. You get to see where someone else stops, and that tends to be the definition of market value. And technically speaking, you should only be paying a little bit above that. And therefore, you're not overpaying. People's biggest fear has actually moved from fear of missing out to fear of overpaying. It's from FOMO to FOOP. So we're in a position where, like, they all want to know where the other offers are.
Yeah.
Right now, like, as an agent, the last thing I want to do is use somebody else's bait to try and drive that offer up. You've got to drive price for your vendor, but you can do so in a more creative and diplomatic manner. So, yeah, I'm just finding at the moment when it comes to buyers out there in the marketplace, they're very, very concerned about overpaying. But if it's a 1 or a 2 year investment, well, you realistically have to be worried about overpaying, right?
Yeah, exactly.
But if it's a 5 or a 7 year investment, you don't have to be worried about overpaying by 5 or 10%.
Yeah.
Because it depends on whether it's for investment or whether it's for owner occupier. Like I've made multiple choices on our own home that are really silly in the long run. Like we've made changes. We actually did a bit of renovation to our property a couple of years ago, and now we've decided we're probably going to extend it. So all the renovations that I spent money on are just going to get knocked off and bulldozed. But you know, hindsight's a wonderful thing.
And that's like you've mentioned there is, you know, and we've spoken about it a fair few times in the podcast. You can look at all of the data, all the statistics that are out there based on, you know, how to value a property and what's happening in the market. And you see people who think, you know, someone's overpaid, but you don't know what value they saw in the actual property. You know, was it convenient for their lifestyle? Were they moving because of a school, like you said? You know, was it a career change for somebody? You don't know what people are willing to pay based on, you know, the convenience factor. So, you know, overpaying is relative depending on the person, I think.
It's also demographic, right?
Yeah.
Like, so I find the younger buyers become, obviously your first home buyers, they can be quite emotional and they're very, I guess you would say, they make quick decisions a lot of the time, right? Which is fair enough. They've never lived in a house that they've owned, so they don't really have anything to compare it to.
Yeah.
And you've got to nurture them through that process. Your able downsizers, so like anywhere from 50 to 75 and through to 80, just depends on the person. They're in a different position. They're usually pickier with the property because they've been through a few. So they know what storage options to look at. They know that they want a north-facing backyard because they've been through some really ordinary properties before it. And plus, they're constantly upgrading. However, when they find that property, I find lifestyle trumps price because I'll look at my parents once again from an example. They're talking about downsizing their home in Port Macquarie. So they'll be downsizing their price. And when they make that decision and choose a home, it would not surprise me if they technically overpaid for it. And I would say to my mum, look, Wendy, that house is realistically only worth 1.1 and they might make an offer on it 1.2. And I can just imagine it now. She'll say things like, yeah, but it's close to your mum. It's close to your sister. And, you know, your dad can walk to the break wall and fish. And, you know, it's not too far from town, so we can walk there. So for convenience, they're paying essentially overs. But for them, they're also coming from a home that's potentially worth more than that, right? So because they're downsizing, to them, it's like a gain because we're taking away money from it. When people are going ahead, so when they're upsizing and they're starting to spend more money, it's a different mindset. But realistically, the able downsizers and the downsizers, if you find the property that they like and they want, they're actually the most likely, with all due respect, to overpay for it.
And I think that's a big thing. And I wanted to ask you about trends to come for the next 5 to 10 years in real estate. And this is just a good transition for the boomers because we're seeing it in Sydney a lot, that there's a lot of people in the Sydney market that don't want to leave Sydney because their family and whatnot are still there. They're selling their big luxury homes, they're paying cash and they're downsizing. Are you seeing the same thing here, and do you think that's going to influence the market moving forward?
Yeah, I've seen a migration in terms of downsizers and where they're off to. It's like they show up everywhere, right? So obviously I do a lot of work in Cameron Park. Cameron Park has always been known as a family-friendly suburb and for young families. The truth is we're seeing an incredible amount of downsizers. So if I list, let's say, a 40-square single-level home, which is a very substantial home, on a 700-square-metre block with a pool and 3 living areas and 4 to 5 bedrooms and 3 bathrooms with a side access for a boat or caravan. They don't generally sell to a family, they sell to a downsizer.
Wow.
And people look at that and they go, downsizer, this thing's huge.
Yeah.
But downsizers love to entertain.
Yeah.
And downsizer, I think, is a term that people think someone in their 90s moving into a 3-bedroom villa. And that's not what we mean, right? Like, that's not what we mean. You can never stereotype who your buyer is. Like, we have sold on multiple occasions. We sold a house with stairs to a 94-year-old. Like, theoretically, I never saw that happening, but it happened.
Yeah.
So I'm seeing downsizers realistically, migrate all over Newcastle, look for those single level homes, but they do want to stay within. And I found that they tend to go, they're content with going further west because that's where their families live, right?
Yeah.
So they want to be involved in the grandkids' lives, pick them up after school or whatever it might be. So we're seeing a lot of that.
Yeah. Yeah, I think that's important, like, again, we can look at all of this data and you've got to know where people are coming from as well, because if you've got cash buyers, it doesn't matter what, happening with the interest rate environment, cash buyers are going to keep the market up.
I do feel, just on that quickly, I do feel that the biggest thing that I see is I feel like we overhype Sydney buyers, right?
Yeah.
So like there is plenty of people coming from Sydney, but do not discount Singleton, Muswellbrook, Tamworth, Armidale, Gunnedah.
Yeah.
And to be honest, they drop serious money.
Oh,
right?
100%.
Like come from Tamworth, they'll be in their 60s and they'll buy an acreage and you're like, and they're like, but we're coming off 500 acres.
Yeah, exactly.
Like, this is only 20. I'll mow this in a day. Like, this is nothing.
Yeah.
So, and a lot of it has to do with the uni. So like, I would say I grew up in a small coastal town not far from Taree. And if I walked down the main street of Taree now, where I grew up around that area, I would know nobody. Yep. But if I walked down Hunter Street or Derby Street, I parked a few blocks down and I saw someone that I knew from Taree, right? Newcastle becomes a mecca for all these regional areas. The kids often come down here for work or for uni and they don't leave.
Yeah. Because
the best way to sum up Newcastle is it's a big country town with all the conveniences of a city.
Yeah. Exactly.
I've lived in Sydney very briefly with my wife. Couldn't stand it. Not for me, right?
Yeah.
And a lot of people are the same. If you come from a regional area, it's too busy, but they want to live somewhere where they can still get Uber Eats at 10 o'clock at night, right? So I'm finding that because that demographic has flocked here, now the grandparents are coming with them, right? And so we see a lot of people, like when I've sold apartments in Newcastle East, a lot of them are just from out west looking for a weekender where they can come and visit the kids at uni.
Yeah. And I think for buyers out there who want access to this data, it's all free information online. Migration data, informed decisions, I think it is ID for me. So, I mean, with buyers in the marketplace at the moment, especially first home buyers and investors, when they're competing with the downsizers, what can investors and first home buyers do to try and set themselves apart?
I feel like the downsizers are rarely competing with, in my market, rarely competing with the first home buyers. The downsizer that I'm sort of stereotyping, and it's across the board, tend to be at a level above that.
Yeah.
So we find that a lot of first home buyers will, like under 800,000, that's where their stamp duty exemption waiver kicks out. There's first home buyers galore. You're selling something under 800,000 in Newcastle, Lake Macquarie, realistically, it's generally a fairly easy task, right? Yeah. There's such a big market for it. And it's such a motivated market. Once you get above that, we're in a position where things slow down. Obviously, they get concessions all the way through to $1 million, but you're in a position where things slow down above that level. Under 800,000, there's just so many people. For Torrens title, not always for things like the strata or community title, but for Torrens title. Investors at the moment in my little patch, what we're seeing is I'm actually seeing a lot of investors sell. Yeah, and nice. We spoke about this before. It's probably the more, I don't like using the term distressed sale, but if I see distressed sales at the moment, it's more investors than it is owner occupiers. Yeah. And it actually has nothing to do with that investment. It's got everything to do with that they want to get the equity out of that investment and put it on their own home loan. Yeah. So I'm dealing with a client at the moment. I'm selling their property. They paid circa $400,000 for it back in 2014. It's now worth just shy of $950,000, and they're in a position where the home doesn't owe them anything, and the rent obviously pays the mortgage. They don't need to worry about their income. They're only got a steady job, but they own a home in Sydney that they've got to get their mortgage down on, right? So for them, they're like, we don't want to sell this, but we kind of have to because we can't service our own mortgage.
Lose their house or investment.
Sorry?
Lose their house or their investment.
Exactly. So they're selling their investments to help with their homes. What we are seeing is a lot of investors look for either high yielding or instant growth in terms of the capital of the asset. Yeah. So like something that they can do work to straight away, particularly if they've got that skill set, or a property that has rental potential from two sides, so dual occupancy, or they can add a granny flat, etc. That's what we're seeing a lot of, which means your downsizers, unless it's multi-generational family, which we're also seeing more of these days, the downsizers don't tend to be competing in that same realm because they're more about lifestyle. The lifestyle properties sell for more, even for a home that might be the same size. Investors don't always look at those metrics. Like they don't they'll care about views and aspects, but not as much as someone who's going to live in it.
Yeah. It's funny that you say that because I actually purchased a property through you for a client for a very similar situation.
Yeah, you stung me on that one, I remember.
It was a first home buyer. They were based in Sydney. The rental return didn't cover the mortgage, but I think the property was maybe 3 years old, so we had good depreciation on it as well. So that we could make up that shortfall for the mortgage repayments. But the reason why we purchased it, we bought it for $700, and this is what I always try to explain to buyers or investors, is there's a difference between market value and equity in a property, because equity is purely from what a bank will value it at. So the valuation came back on that one as $1 million. So not only did it meet our criteria in terms of covering our our mortgage repayments, that suburb has a good track record or good trends for capital appreciation. But his strategy was to get into the market with some instant equity to withdraw that equity and go again, because he's quite cashed up at the moment. So it's, that strategy worked for him, and I think that's just a good example of different sub-markets within. And
everyone's looking for something different, right?
Exactly.
Like some people, there's so many investments out there that are so high negatively geared at the moment, but they're high income earners. So they just ride it, like for them, that's a benefit, right? So it just depends on their personal situation. We are seeing more investors come back into our market, but we're also seeing them sell just as quick. So it's kind of like a changing of the guard with the way the investors are working.
I've got some numbers here on the Newcastle market over the last 10 years. Do these numbers surprise you at all?
Yeah. Jeez, I need my glasses to read these. Where are we at? They're huge.
This is the top 10 suburbs purely for houses based on the typical price point. The top ones for Newcastle, the bottom ones for Lake Mac.
I'm not at all surprised. So just for reference, the top one being Islington for Newcastle. No disrespect to anyone who lives in Islington. I think it's a great suburb, but I remember driving through Islington 15 years ago when my friends went to uni here, and they'd be saying like, "Oh, it's pretty rough around here." No, don't get me wrong, most of them are uni students, so they live there. But it was considered a cheaper suburb. It was considered lower socioeconomic, and it was considered it was in need of gentrification, right? And it's now gone through that. Your warehouse conversions are selling there, multi-million-dollar warehouse conversions, and they're amazing. And then the top one for Lake Macquarie, well, it kind of makes sense. Murray's Beach. Murray's Beach, if you look back 10 years ago, probably wasn't much. It's one of those areas. West Wallsend's also listed there as well. And they're areas of two halves, more so West Wallsend than Murray's Beach. So West Wallsend typically pre-2000 or even pre-2010 was 3-bedroom miners cottages or ones that have been upgraded. Whereas now you've got a new development out there where the median house price in the new development is closer to 900,000. The median house price in the older pocket's 700,000. So areas like whether you've seen subdivisions like Taralba and Bullaroo and Cameron Park and Fletcher, because you're comparing old homes to new homes within the last 10 years, those data can be a little bit skewed. But these numbers do not surprise me, particularly areas like Bolton Point, obviously another area that's gone through a massive process of gentrification. Some of Newcastle's premium suburbs up there for Newcastle, including, the Hill. But Maryville, for instance. Maryville, people used to complain about always having coal dust on their cars and things like that. And a lot of the homes don't have parking and things like that with Carrington as well. But it's in a city and it's trendy. And we're following Sydney trends here. Like Islington, to me, it's got a bit of a Newtown vibe to it, right? And that's what seems to be happening. Those areas like Redfern, we lived in Sydney. We rented in the eastern suburbs. My wife and I stayed in a suburb called Bellevue Hill, and I always joke that I think we were the poorest people living in Bellevue Hill at the time because it's full of multimillionaires. But like Redfern was rough, but it was still expensive. And we're seeing some of our Newcastle suburbs, go
start to do the same thing. In terms of in terms of the business moving forward, I mean, you mentioned there that you started the new business and it's under UrbanX, which is quite new in the real estate marketplace in terms of, businesses. And we were talking before about potentially the franchise model not being as lucrative as it was before. What do you see moving forward with the real estate business side of things?
Yeah, we've seen the real estate industry diversify in terms of the way businesses are brought to the forefront. So obviously many years ago you had your big players, your LJ Hooker, I'm not trying to pinpoint any particular brands, but like, your Harcourts and like PRD, and people would just fall into those brands. Now I find a lot of what those firms used to offer in terms of the back end. You talk about, graphic design, they talk about databases, you talk about reach. But the reality is a lot of that with the way technology has progressed has been taken away, right? And franchises have their benefits, but they also have their negatives, right? Like they can come with baggage, right? Like for instance, you might work for, I won't choose the real estate industry, I'll choose someone else. But let's say you work for Toyota and you're in a position where someone's had a bad experience with Toyota in Cairns. Well, they don't want to work with Toyota in Newcastle either. Exactly. So they'll paint them with the same brush. Yeah. The good thing about us, Bo and I, my business partner, often joke about this, is that if someone doesn't like Taylor Headley, Bo blames me and I blame him, right? So reality is we have the ability to create our own perception of the way the marketplace perceives us. And UrbanX, just to clarify, UrbanX is a company that does the back end for a lot of different real estate agents. I think it's 105 at present. So they do like things like trust accounting. They sort out marketing. They assist us with business growth. They assist us with employment contracts. They assist us with all these different jobs that they provide from the back end. They're Brisbane based, and now Sydney based as well. And it's just been for us, I don't know if I would have been able to start my own real estate without them. Because I'd like to think that I'm a relatively competent real estate agent, but I had no idea how to run a business. Like it's two different things. It's a different discipline.
And at the end of the day, do you focus on selling and servicing your clients, or do you focus on building business?
Much to Mackenzie, my operations manager's displease, I don't focus on the business that much, right? So my job is to obviously focus on my clients, focus on selling. And my role, I think one of the questions that you had down there was, how's my role going to evolve? And my role evolves that I probably would like to think that I differ a little bit from other real estate agents in terms of, we sell anywhere from 130 to 150 properties a year between Bo and I. But our goal is to potentially not always sell that many, right? I love what I do. I take nothing and I really, really enjoy it. I was just telling you before about how late I've been in the office every night this week. But I do not believe that it's fair on my family to do it forever, right? So I need to obviously evolve as an agent and as a mentor for other agents, and that is my goal long term. Not within the next 1, 2, 3 years, but I hope to be, I'm 34 now, and I'm hope by the time I'm 45 that, I deal with some of my repeat clients and I'll be selling anywhere from sort of 20 to 60 homes a year, but I'll be there for the agents that work at Taylor Headley to help improve them, because I really get a kick out of it. I really enjoy it when, Jeremy Allwood from my team or Matt Nelson, Matt Nelson's been in the industry for 20 years and he comes to me and he'll be like, I learnt this from you. And I love that. It actually it's a hybrid of being a real estate agent and teacher. So, to me, that is our goal long term. Bo has a better business mindset than I do, and we cover each other's strengths and weaknesses. Bo is exceptional at selling property, like the best person I've ever worked with that can sell property. It's like he's the offer whisperer. They just keep coming to him. I'm really good at the listing side of things. So we play off each other's strengths.
I mean, it's a good thing to touch on there as well. You mentioned, that mentorship, but also the transition of real estate by, I guess, democratizing information and the accessibility to different technology now. What advice would you give to people starting out in the industry, but even potentially agents that have been in the industry for a while and potentially want to start their own brand?
Yeah, so I considered starting my own brand for a long, long time. I worked for a really good brand previously, one of Lake Macquarie's best brands, there's no doubt. And I had a lot of really good mentors that helped me through that process. I only ever worked at the one firm. It did change hands, so it went from McGrath to Bell
Okay.
But one thing that I would say after what I did was that you're better off. There's a lot of agencies out there that'll take new recruits, right? We're one of them. We've just put people on in the last couple of weeks, but you actually need to be in a position where you go and work for someone where the roadmap has been laid, right? Like someone's done it before. You've got a mentor. Because the thing is, we spoke about it a little bit earlier when we're sitting having a chat, is that you can be really competent in the process. You can be a really good person. You can be do all the research in the world. But if you work for an underperforming leader or you become who you're around, essentially.
Exactly.
So you need to be learning from people that are doing it the best. So like our roadmap for a lot of our agents at the moment is to work within mine and Bo's team, and then we train them and then they'll go up and be their own agent. And it's a way that we can instill the values of Taylor Headley in those agents, because just bringing on 50 or, no, that's embellishing, but let's say you brought on 10 high-performing agents, they can bring baggage, right? Like they can bring, and they might be very lucrative from a profit margin perspective, but at what cost to culture?
Yeah, exactly.
And culture is really important.
Yeah.
Like I've seen many businesses over my time, whether it's in real estate or other disciplines, that have got good culture and those that have bad. And I don't ever want to walk into my office and feel like my staff really don't like me.
Yeah.
Sometimes you've got to have tough conversations, and that's something that I've definitely learnt. But you're in a position where, I like to walk in there and everyone greets each other, and, like we have a bit of laugh. There's a bit of banter in the office. We can springboard off each other. So for me, the biggest advice I could give an agent getting into the industry is do your research on who the market leaders are. Go, if it's going to be in sales, try and go the sales associate route. Deal with the volume, and then when I left and went out on my own as an agent, I took an assistant with me straight away. I was already selling 30 or 40 houses a year. And for me, it was a springboard straight in to being a successful real estate agent. Because I've seen a lot of really good young people fail because they pretty much start on day one. They do a day's worth of training. They give them, it's a bit old school, but essentially something in lines of a phone book and be like, here, go find listings, right?
Yeah.
And the reality is it don't work like that.
Yeah.
Not in our market. Different markets are different. I was chatting to an agent in Western Sydney the other day. Really nice guy, 100 miles a minute. Like I think I talk fast. This guy is fast. But he's in a position where he's telling me about how hard they prospect. But it works for him. The guy's selling 100 houses a year. But not in our market. People are like, who's this? Sorry, what? Why are you ringing me?
Yeah, exactly.
Nah, I don't care. Carl Barron's got a really good joke on that if you've ever seen it. So it's I'll send it to you. But so like people don't want to hear, they don't really care about a lot of those things that real estate. Try and always impart value. That's our biggest thing.
I think I think volume for junior agents coming on board, the volume is a really important thing. Like when I came into the industry, I went straight into buying and not selling. And if I didn't work for that company that I started with, they did 250 purchases that year. And just the amount of volume and the amount of value that you see, being involved with each of those transactions, you feel like you're in the deep end. You feel like quitting, in that first 6 months, but just stick with it. And I think that experience, sets you up for the future.
Well, it grows your repertoire of skills.
Yeah.
So I have some of the agents in our office come to me and they'll be like, oh, we've got this dilemma. And I'm like, I've experienced this 3 times, right? Or I've done this multiple times before. And it's not because, I'm more intelligent than that person. Like Jeremy's the most intelligent guy in our office. But because you've done more transactions, you may have come across that problem before and you've managed a way to solve it.
Yeah.
So the more transactions that you do, the better your skill set becomes. Particularly if you do, like, there's agents out there that are transactional and there's agents out there that build relationships. And the truth is we never set out to be the highest transactional agent in the area. Like that's not our goal. It just kind of worked out that way.
You built relationships and now
the relationships grow. And I get a lot of phone calls on a daily basis that, people talk about dollar productive work. Like they're not dollar productive work at all. It's someone that might be ringing me like, hey mate, like we've, you sold our house obviously. And I'm like, I remember who you are, John. And they'll be like, we're looking at this thing down at, Central Coast and the agents told us this, what should we do? Okay, this is what I want you to do. So like, I'll talk them through the negotiation process because I like that stuff. Because then they're really happy when they acquire the property. They tell all their friends about, how much they like the experience with us. And then we get 2 listings off the back of that. That's not the purpose of it, but it does fall that way.
Now you're not cold calling.
Yes, exactly, which I was hopeless at. So, you know, sort of stick to your strengths, right?
Yeah. I think that's it for today. You've provided some good value, not only for home buyers, but I think people wanting to get into the industry as well. So appreciate your insight.
Thank you so much for having me. It's been a pleasure, and sorry to talk your ear off.
It's been enjoyable. Thank you.
Thanks, mate.